Portfolio manager of the Franklin Utilities Fund. He joins us now from San Mateo, California, to talk more about this industry. Welcome.
Thanks for having me, Lane.
Well, compared to those bond yields, it's no contest there. But why buy utilities now? If the expectation is for an economic rebound 6 to 9 or even 12 months from now, why not focus on more speculative industries that could benefit more from economic growth than these utilities would?
Well, Lane, with the industry investing tens of billions of dollars in unregulated generation over the last few years, it actually is more of an economically cyclical and sensitive industry. That said, we're not so sure the economy's out of the woods, evidenced by Greenspan's remarks related to deflation and concerns thereabout. So we think the utilities provide a good investment opportunity for those looking for capital appreciation and current income.
Do you think they're going to be able to compete with some of these other names that are likely to rise in the event of an economic rebound, though? Is it going to be similar?
Well, we think that if there was a broader economic recovery and a big move in the broader markets, utilities would underperform. But we're hearing a lot from investors that they've learned from the past, the bull market, and they remember what they were originally taught about diversification and not keeping your eggs in one basket. And utilities are a great way to diversify your portfolio and get share price potential upside and current income.
And there's always been the dividend play for utilities, and now the added potential bonus of tax advantage for that.
Yeah, definitely. With the move out of the Senate last week, we think the prospects for some sort of dividend tax relief are even greater. And with money market yields at 1%, 10-year Treasury down at 3.36 today, a tax-free yield of 4.5% is pretty compelling, especially with the industry fundamentals on an improving trend.
When we're talking about utilities, you focus more on the electrical utilities right now. Why do you prefer them over some other names? And certainly the whole question of what a utility is really diversified in the last several years. So explain what you like specifically.
Well, we're focused mainly on the electric utilities, and we have seen a diversification trend over the last few years, and it's caused some troubles in some utilities. Several have cut the dividends. But at the Franklin Utilities Fund, we have been focused on companies that are high quality, strong balance sheet, and those that are improving their fundamentals where they have gotten a little out of whack. Some companies we really like include Exelon and First Energy. These are companies that are generating big free cash flow momentum. This free cash flow is going to pay down debt and improve the equity value and hopefully the PE multiple.
Is there a risk there to the cash flow that's coming through, considering that both of these companies have nuclear interests that they may be exposed to? Exelon, the largest operator of nuclear facilities, that carries certain political issues as well as legal risks. And near term, you have First Energy, which owns that troubled plant at Ohio, and there's been concerns about that. Are you concerned about that going forward for these names?
That's definitely a concern, something we're watching. Nuclear operations, as you mentioned, do carry special political, legal, operating risks. In the case of Exelon, they are the largest operator of nuclear facilities, but thankfully they have the premier operations staff led by Oliver Kingsley, probably the best manager of nuclear facilities in the world. He's turned around several nuclear operations, including the former Commonwealth Edison and Tennessee Valley Authority. So we have a lot of confidence in his management team. He was recently promoted to the president and COO slot, so we were very comforted by that move. For First Energy, they are facing a near-term issue of a troubled nuclear reactor. They're trying to get back online. But we think even in a downside scenario where they have to mothball the plant, earnings can still be preserved around the $3 level, and on an 11 times multiple, you only have about a $1 downside in the stock price. So we think the upside greatly favors the downside.
Robert Becker, thank you very much. Portfolio manager of the Franklin Utilities Fund, joining us.